YouTube, what's going on? This is TerrenceRe, and I'm gonna give you guys a stock market update, and I also got a new trade alert for you. So stay tuned to after the buffer, and then we'll get right to it. All right. So right now, what I got up on the screen is the S&P 500 futures. Right now, we're down about 64 handles. It was down more than that at the open of the market. Let me see. I'll show my drawings. I took a lot of that stuff off just to make it a little easier to look at when I initially come on. But so we got to move. Um, Yesterday, you can see this long wick, this long candle. So right before the end of the day, we had a big reversal. And then the day it's looked like it's opened up like it's going to test those lows again. On the NASDAQ, got the NASDAQ down about 2%. These are the NASDAQ futures. The Dow futures down about a little under 1%, point 0.8. And then the Russell futures are down 2%. The Russell futures are always, for the most part, those in the NASDAQ are the most volatile out of the futures for the most part. Actually right now the bonds are down. Well, it looks like it's green, so that just off of the highs. So you got the notes are steady. You can see them right here looking like they're trying to break out to the top. Looks like it. But you got the oil futures. Oil futures are back beasting again. This is a yearly chart, so you can see the oil futures have been going up. And we got gold breaking up. I did a video on gold a few weeks back. I don't know, maybe like a month ago before it did all of this. So you guys might want to check that out. I do think eventually gold will go ahead and take out these highs right here. So generally, what happens is when equities begin to go down, then you have people trying to do what they call a flight to quality. So they may look for things like bonds or gold to put the money in. So if we come down to the ETF, the TLT, which is the ETF of the bonds, you'll see that it's up. Look like it's forming some type of reversal pattern down here that hadn't quite formed all the way. This is the gold ETF. So what I showed you earlier when I showed you gold, those were gold futures, right? And here's the gold ETF. So if you don't trade futures, you can come down here and trade the gold ETF, which is a stock. So you can come down here and trade these as well. If you don't trade bonds, if you don't know how to trade the futures, you can come down here and trade the TLT, which is the ETF, the stock. And so basically what's going on this week, you know, I won't ever, first of all, I'm not a financial advisor or anything like that. I'm not going to advise anybody to buy these dips. I think that, and this is just my own opinion, that the market is is I think we're in a bubble. The Fed giving out money, sending stimulus checks. We've had a 0% interest rate, for the past few years. And so basically, Jerome Powell in his last speech, they're basically going to start tightening. So there is a FOMC meeting tomorrow. So I don't expect a whole lot of action today till after that meeting. Now, we are going to get some fireworks probably this evening. Microsoft has earnings today. And on the Tastyworks platform, so like over here to the right, this little box over here, if you look over here where this E is, y'all don't know if you can see this if you're looking at this on the screen, you probably be able to see it, but I don't know if you'll be able to see it on a cell phone watching this video. But if you download the platform and look over here to the right, you'll see this E, and it has a 125. That's letting you know that Microsoft has earnings today. This bell with the with like this little sign, like the greater than, less than sign over here to the right of the bell, and you know it's gonna be after the bell. So today Microsoft is gonna have earnings. And at that point, I expect I got Microsoft going down no matter what, right? Sometimes earnings can be like a catalyst to make the stock move. Um, so, but I expect some fireworks probably after the bell, right? You might see some post market movement, kind of like Netflix when they had theirs, and then tomorrow we'll be able to trade and see what's going on in the market. So Microsoft is going to have their earnings today. Tesla is going to have their earnings tomorrow. That's a big one. Um, I think Tesla is a big one just for people, period, like people that trade, because Tesla is like that. It is the stock, right? That everyone wants to speculate in. It's like I don't know. It's almost like gold in the Wild West, right? Just because of the speculation, And so I expect that tomorrow would be a big day in the market, no matter what. I don't see how everyone expects their numbers to be good, so I don't even. And one of the things that I say is they haven't had bad numbers, I don't think, in a while, right? So my notion is, why is it trading sideways even to begin with, right? So the market has a way of pricing in risk, and that's what I want to get to today. I want to did all of that just to get to where I want to be. I placed a trade today in the home builders XHB, right? This is the home builders ETF, and I sold a credit spread. Now we're looking at the option chain. Let me close this up. This is where you separate the men from the boys, the women from the girls, and whatever else y'all got. So right here, if you look, you see these orange W's, right? These are weeklies. And these are weekly options. So you see we have an expiration on 3 days from today, which is Friday. That's a weekly. The next Friday, right? 10 days from now, 17 days from now. And you see right here, which would be called a monthly option expiration. This expires on the 24th of February, and then so on. And then you got monthlies out here. I There are some stocks that you can trade in the weeklies and get really great markets, and it doesn't matter. Right. There's probably, I don't know, maybe 10 to 20 stocks that you can do that in. Maybe the SPY over here, the Qs, pretty much everything you see on my watch list. I'm gonna do a video on my watch list and why I look at certain things every day, the same things. And I can look at my watch list, and then my watch list just tells me what the market is doing. I don't even need the chatter in the news. I can look at the watch list, and I can say, ooh, boom, bonds is up, volatility is up. We got action, right? I know something going on. I turn the TV on and then I see what's going on, right? But my watch list already told me without looking at any chart what's going on. I'm gonna do a separate video on that. But back to this. So I automatically knew I wanted to be, for the most part, if you're not in a super liquid stock, you want to stick with monthly options, right? I'm gonna come over here now. Tastyworks has something to let you know how liquid something is, and this only has 2 stars. So if you're not um, well versed in options, I wouldn't even advise you to trade anything that doesn't have at least 3 stars over here, 3 or 4. Right. So this one I came in, but I can do this. So because I worked the market, and I'll show you what I did. So I came in 24 days. I didn't want to be 24 days because I know that I like to This, you're right up on that range where you're going to be exposed to directional movement, a lot of directional movement in the market. You get around 23, 22, 21 days, you start getting more exposure to gamma, which um, which will directly make your deltas change. It'll accelerate the movement of your deltas. So I came out to March, 52 days. That's a nice range for me. And I sold the 77 strike or the 36 delta, bought the 18 delta, right? I'm gonna do it again. I won't actually press send, but we'll pull it up and see what it's going for. Right now it's going for a $1.35. I did it and got a $1.40. So if you're looking at this video right now and you followed me into this trade, now remember, follow me at your own risk. You own this trade once you put it on. But right now, as it stands, um, you're gonna collect about a buck in theta, 1.1 in theta, and it is a negative 18 deltas. Now, what is that saying? So it's an easy way to see what this is showing. I sold a 36 delta, bought an 18 delta. What's the difference? 18. Now, this is a bearish trade because I'm selling calls, right? And buying calls. I'm on the call side. So when you sell a call, you want the market to go down, or you just don't want it to come beat you, right? So when you sell options, now one of the things, now look up here, the IV rank is 86.9. Generally, the rule is anything like once you get up over 30 in equities, um, you want to start selling options. Now you can do it in these indices and SPY and the QQQs, stuff like that. Probably like over 20. And then you can do some other little tricks in that. But so this is real high implied volatility. This is a real high rank, right? So I want to sell options. Now, think about it like this. And when I talk to people, passing, talking to people at work, talking to people, because I do work. I'm not like, I ain't even on front like I'm just doing this full time. Not yet, right? So you want to, when things are on, when do you want to sell insurance, right? When do you want to be you want to buy insurance when the house is on fire? No, it's going to be expensive. You want to sell the insurance, right? You don't want to buy these options and they're expensive. Options right now are really expensive. Why? Because volatility is high. There's a lot of risk out here in the market. When the vol is high, which is, you say, well, if you're a newbie and you don't know what you're saying, VIX. I'm gonna take my VIX and put it up here, make it easier to see. The VIX, you see is green on the day. It's up. Volatility futures are up. That's letting you know the VIX is up. And there's something else that I look at called the VVIX, which is the volatility of the VIX, which is also up. So that's gonna let us know, and we can look at the chart, even if you don't know any of that stuff, right? And you look at the chart, look at these moves. Look at this move yesterday on how much ground it covered. Come back to the S&P futures. Look at this move. Look at this wick. Like it got down here and just at the end of the day. Look at that move. That's crazy. I think I seen them say like that's one of the largest intraday moves in history, or is one of the top 3. So when you get moves like, look at this one. When you get these moves like this, that's letting you know that the market we're getting big moves, and so vol is expanding and the market is pricing in the risk. You can come here and look at the risk on the act. Now this is what, from what I know, this is I only know that this is on one platform, and that's Tastyworks. You can see this ruler is showing you the expected move, right? And you can look over here and see the risk on the IV of the particular option expiration. And let's go back to the option chain. It's telling you with an 86 rank that that this is a little bit more volatile than what it normally is. We can see it in the actual chart with the big moves from high to low, and we can also see it by an increase in IV. So there's more risk in the market. We can also look at the VIX. The VIX is up. Look at the VIX on a chart. Look at this, guys. Look at this. From here to here. Look at this. This is a yearly chart. So over the past year, this is the highest yesterday that the VIX had been in the past 12 months. So options are expensive. Now, let me ask you this. Why would you want to step in here? This is just me. Why would you want to step in here and buy? Like everybody telling you, buy the dip. Buy the dip. Buy the dip when you just crossed over this 200 exponential moving average. What am I buying? Look at this on a yearly. Let's go to a weekly. I'm gonna go to a weekly chart, and I'm gonna go out 3 years. Look at this. This is a cliff. This is the home builders ETF, right? Look at this. Now, if you're skilled enough to day trade, that's something totally different, guys. I'm gonna look at the SPX. Look at this, guys. This is 3 years. Each one of these candles, I'm on a weekly chart. Each one of these candles represents a week. Look at this. So this is 3 years. That's coronavirus. This is that. And so ever since we started getting the stimulus checks and all, and you seen it just go straight up. So now they saying they finna stop. Now look. So if it went up because of the Fed, then what's gonna happen when the Fed remove his hand? Anyway, that's just my opinion. But even if you don't believe that, why look at the market? So you don't come in here the first sign of a down move and just start buying? Nah, I'm not going to advise that. So that's why I'm selling options. Even if you do buy, even if you do get long, I wouldn't buy options, and I darn sure wouldn't buy stock. I'd be selling puts. I get on the put side and sell puts and sell put spreads to get long, or I would buy option spreads, like maybe a call spread where I can limit my exposure to theta. Hey, if you're watching this video, hit the like button, hit the subscribe button, and then that way, so whenever I'm doing a video, hit that little bell, you get a notification, and share this video. It's also a link down in there in the description with my Upwork profile if you want to get some one-on-one training, like it's just me and you, and then I can, go over some of these concepts with you. But so that's my thing is I don't want to be a buyer of anything. Look, the house is on fire. I don't want to buy nothing. I'll let it commit to going up, right? Let it say you may not get the best price, but let's let the Fed talk tomorrow. Let's get a little bounce, and then it start going up again, and then buy. You ain't gotta be the first. I don't gotta be the first one in to buy. I don't have to be you don't have to jump out here and buy this. This is what they call catching a falling knife. Man, that candle, that wick look like a knife. Look how pointy it is. You just gonna come in there, you just gonna catch it. Okay. We'll see how long you can hold it before you puke your guts. Because it's a lot of people looking at portfolios today and they think and they puking, they sick. Well, guess what? The sickness is just starting. Look at this. So it ain't like this is. I'm not saying that I know what's gonna happen. Man, look at this. Look how long this market been going like this. And that's ever since this is the coronavirus, when we had the pandemic and all the shutdowns, and it's just been on a cliff. And now the first sign of it coming over that cliff, you gonna step in here and buy it. Now I'm not saying it can't go up. It can, right? I just don't want to be the first one. I don't want to be the test dummy. So I'd rather see it like give me a couple candles up into here and let me get up into here and then let me buy. But they say, well, you're gonna miss the best price. That's okay. I don't want to be the test dummy. Now it is oversold, excuse me, on the short term, right? Because you know it is stretched out. So I expect a little bounce. Like it wouldn't be abnormal to see a bounce right here. To see the Fed come out, do his little dipsy do, talk, ease the market, and then you see it bounce up a little bit and go up in here to make. That's why I said if you're skilled enough to do some intraday trading, then that's cool. I'm not going to advocate that, right? Because I know it's very few people that can do that, and it's not easy, and you got to have strong nerves, and you need to be well capitalized, and you need to be good at losing, right? Because you're going to be trading on a smaller time frame. You're going to be dropping down. You're going to be trading on like the 1 minute, 5 minute, and you can make some money like that. And there are people that can get down doing that, but I don't like to advocate anything like that, right? So this particular account, this is the small account, like the small trading account challenge. So I do pretty much basic stuff in here that's not real risky, right? So we're gonna come back to this XHB home builders, and I'm gonna show you. Once again, I sold the 77. You just come over here on the bid, click the bid, then you come over here at the 82 strike, buy the ask, and then there you go. Now what I did, now this is something that I did. Um, I did work this trade. So you, depending on what platform you're using, you see how I got a 110 and you got 160. That means you got 50 points between that spread. Ordinarily, you got to work this order depending on what platform you're on. I wouldn't come in. Those are wide markets. I wouldn't come in and just take. I would come in and probably come in at like 150 and then hit and see if I get filled. Right? I would come down, motor it down, maybe go 145, see if you get filled. Right? Maybe put it at 140. Work it. Work the order. And so you would pick your price and hit review and send, and then let it sit and then see if you get filled. That's called, working the order. When you're trading in a wide market, you don't want to. Now, the way I have Tastyworks set up, it's gonna go to the mid price in between the two automatically. I don't know about all platforms doing that. I think Thinkorswim does that, and you'll see some of my other videos where I do some stuff on Thinkorswim. So, and I already have my working order to close this trade. I collected 140, and I already put a GTC in. So I'm gonna cancel this and then put it in again. So I came in, I clicked here, left click here. Now I got both highlighted because I'm gonna put it on as a spread. I'm gonna close it as a spread. I'm not legging out. I'm right click, and then the close profit, I want 50%. You say because I'm risking 360 to make 140. That's why I got a 69% probability of profit. But if I just, instead of trying to hold it to expiration to get that 140, I'm gonna take 70 and get out. And you're like, man, why you risking a lot to go on to get that 70? It increases your probability of profit. So we're taking trades that we have a high probability of making money on. And if you do things over and over and over again that where the odds are in your favor, then you manage the losses, then you should be a successful trader or successful at whatever you do. So, right, I'm gonna come over here. It's 50%. Now you can move this up. Like you want to collect 40% of the max profit, 670. You can move it around. 50 is good enough for me. Hit the click on this arrow. It shows it because I sold it. I collected 140. Now I'm gonna buy it back to close out the trade. So I opened the trade, I sold it, and collected 140. I'm gonna buy to close it for 70. That'll leave me with 70, and then I'm gonna send. I'll send an order, and then there it go. And so what'll happen is, so if you work in a job, anything like that, you just leave this on, right? What'll go on throughout your day, and it'll if it comes in profit, you'll hear the little vibrate on your phone, ding, and there it is, right? So your max loss, no matter what the market does, is 360 bucks. But we'll monitor that, right? And I got a lot of little tricks and trades about how I chose that strike, why I'm getting short, basically into the hole. I don't think this sell off is done. I think the smoke is coming in this market, and that's why I'm telling people, even if I didn't know anything about the market, I would still sell options. I can come in here and make these trades without looking at a chart at all. I got a high IV rank. I can come in here and just do iron condors all day, right? So that's one of the things that I wanted to talk about today. So that's your trade. So right now in this account, we're 4 for 4. We're up a little bit on the year, and we're gonna try to double this account. So anybody can follow this in the description. Click on the link to Tastyworks. Go open up you an account with them. Put 2 grand in, and then follow the channel, man. And then if it's some questions, put questions in the comments, or things you want to hear me talk about. Go over. Like I can do it all. If you got some forex stuff you want to see me do, I come on here and do a video for forex traders. I'll come on here and we'll talk a little. If that's what you into. Um, if you want to just do futures, I probably won't do any futures trading in this particular account though. It won't take a lot to blow this account out. So you need to be well capitalized to try to do like futures trading, and it's risky, you know. But we may do some options on futures in here if we see the right opportunity present itself. And with that, know your risk. Always know your risk. Be comfortable with your risk, right? Be comfortable with whatever. Look at a trade like this trade that I have on. The max loss is $360. I'm cool with that. So if you cool with that loss, then you can go on out your day. If you putting on trades that you're not cool with the max loss, right? Now, obviously, if you own a stock, you don't expect for it to go to zero. But if you got Netflix, you getting killed right now, right? You getting smoked. So you need to be comfortable with that. I wouldn't even be in this right now. I'm just gonna be honest with you guys. I would have been cut bait and run. So Tesla, I tell you what, I'm gonna leave that for another video. We're gonna come back and I'm gonna talk about Tesla some more. I'm gonna come back and talk about Microsoft some more, but you gotta subscribe so you don't miss those videos. And with that, I'm out, y'all. Peace.